All right, fantastic. So this is a free webinar. It's sponsored by FinTech School. It's a company that I created roughly 5 years ago. We have worked effectively on providing training solutions for financial institutions, governments, and as of late, we've been working with several universities, including Wharton and Cornell, on the same topics that you're seeing here, whether it's FinTech, blockchain, crypto, and the likes. So the topic today is Bitcoin and the new economy. What I'm going to do is go from the traditional means of how we used to transfer value all the way through the future of cryptocurrencies and the most recent implementations of blockchain in enterprises. This is, you could say, my background distilled to one single piece of paper. On the left-hand side, I spent close to a decade working with different investment banks and asset managers. In 2012, I decided to leave my financial services career after being promoted to director at BlackRock, one of the largest asset, or rather the largest asset manager in the world. And I got started effectively with one of the earliest robo-advisors called Bucksprout. Bucksprout almost got acquired by Wealthfront, and in the startup land, almost doesn't really count. But I learned a significant amount of lessons in addition to, if you can put it into context, Wealthfront barely had 60 million in assets at that point. Betterment, Wealthfront, and all the other robo-advisors at this point are north of 15 billion. So you could say it was perhaps a little bit too early. I've also done some work in the crowdfunding space since the rules have changed in 2012, 2013. And so I had created a company called FundPass, which was a funding platform as a service that essentially provided SMEs with access to capital by leveraging new rules and new technology. But here, as of late, I've been spending most of my time either advising companies in the fintech space to help them get to market, help them raise capital. Similarly, with VC funds that are focused on fintech, I do kind of the same work, basically a little bit of a doc connection exercise. So let's get started with the topic that we're here. We're not here to discuss my background, but more importantly, what's going on in the in the world of blockchain and crypto. What I like to, my presentation style tends to be more, from 5 to 55. And so, starting with basics, right? When the internet was created and it became mainstream, it effectively enabled the transfer of information. You can transfer information seamlessly now across the globe. And so, the analog of that from a blockchain perspective and a crypto perspective is the enablement of the transfer of value. So picture a world where you could be sitting in Indonesia somewhere doing a contracting work, and you can get paid immediately upon completion of that work, either through a transaction in crypto or because the rules have been embedded into a smart contract. We're going to discuss smart contracts down the line, but picture an executable, a set of rules that could be programmed into a network so that if a condition is met, the payment can be made. And so, again, the internet effectively created a seamless way to transfer information. Blockchain and crypto are creating already a way to transfer value and also information embedded into smart contracts. Okay, trying to move here on my next slide. So what were some of the traditional means of transferring value? Obviously, everybody has, I believe, there's still 2 billion people, close to 2 billion people that are unbanked. But for those that are banked, traditional means of transferring value would be through a bank account, right? Cash has also been a traditional means of transferring value, through different currencies, credit cards, to pay merchants, in the same way. And then you have had, obviously checks, ACH transactions, wire transfers. When we fast forward to now, you have the Venmos of the world and the Zelles of the world. But before that, you also had PayPal. PayPal has created a significant amount of wealth in Silicon Valley through the exit that it created when it went public. Similarly, TransferWise, a fintech company that has focused on wires, has significantly dropped the cost of a wire from around $50 to approximately less than $3 per wire. So interesting developments there, but how would value be transferred in the future? Again, seamlessly, the same way that we transfer information. So, when we're entering the future here, two of the main currencies that are being utilized are Bitcoin and Ethereum. Bitcoin on the left and Ethereum on the right. They're very different because the protocols at the moment, both of them are dependent on mining and effectively proof of work, and we're going to discuss that in the next few slides. But Ethereum has a lot of smart contract functionality embedded into it. Bitcoin is obviously the most notorious one and the oldest cryptocurrency that is out there. Bitcoin also has a lot of the institutional instruments that are required to hedge risk, right? So these are called derivatives. So you can have a trade on Bitcoin futures. As of late, ETFs have also been created on Bitcoin. And Ethereum has, its own, merits. Obviously, a lot of the decentralized finance is being run on the Ethereum network. A lot of what we know as ICOs, or initial coin offerings, were backed or rather built on ERC20 tokens on the Ethereum network. And so picture this as two different coins that are operating in two different blockchains, two different networks altogether, and they each have their own merit, as I said. So entering the world of cryptocurrencies, there's a significant amount of cryptocurrencies out there, and I'm just going to show you something real quick. This is Coin360. Deep, can you just confirm that you can see my screen, please?
Yeah, yeah.
You can see Coin360?
Oh, no. Oh, yeah, we can, yeah.
Okay, much appreciated. So Coin360, again, it's back in the 90s. I used to work at Merrill Lynch in New York, and one of the things that we built was a smart money map of the market to track different sectors and to track different positions for the bank. Well, this is a very similar tool, right? It's a red, amber, green sort of status, in terms of how the coins are performing. You can see also the market caps on some of these coins and the prices, and then you could even drill down into one of them. One of the ones that I'm following closely is Cardano. I don't own a single, coin. I'm not here to tell you to buy anything, pump and dump or anything. I'm just giving you the tools that you can leverage to actually go and research a particular coin, understand the supply, how much is circulating already in terms of supply, the market capitalization of the coin, how it ranks in the market, the pricing of these, and how it's actually performed over time. So what's the point? The point is, when you look at Bitcoin in terms of its sheer size and market cap, it is obviously number one. When you look at Ethereum, clearly is number two. But also when you look at the tokens that are based on the Ethereum network, it's a significant amount of coins that have been launched on the Ethereum network. And so this is when I was talking about ERC20 tokens in the ICO craze. A lot of those are still around. There's also a lot of decentralized finance based or tokens that are meant to power DeFi apps. And so again, this is a really good tool, research tool for you to understand and research cryptocurrency, as a market. So I'm going to go through a quick live transaction so you can understand very much hands-on how it works. I'm going to launch my MetaMask wallet. And I'm going to cheat a little bit because I did actually perform a transaction before, but I'm going to send, let me just grab this from here, for C4D8. So this is the wallet address for my contractor. In the case of, as we said, somebody doing work on a contracting basis from one country to another, how would I actually pay them for the work? I would effectively put their wallet address here. I'm using, basically this is a test, right? So I'm using the Ringp test network. I'm not in the Ethereum main network because I'm not sending real value, but this is effectively the closest you can get to production. Also important to note that you can have 18, 3, 4, 5, 6, 7, 8, 9, 10, 1, 2, 3, 4, 5, 6, 7, 8, 18 decimals in terms of precision. And so I'm going to confirm the transaction. And we'll see if it actually speeds up this time. Okay, so the transaction has already taken place. And I'll just show you the prior transaction because I this thing is going to load. But this is what an example of a transaction that took 20 seconds ago would look like. You have a transaction hash key, which is unique, right? You have the value that has been transferred. In the prior transaction, I had only transferred 0.1 ETH. Let's see if this one loaded. This one loaded, and it's basically 18 decimal places. And if I showed you before the end of the session, I'll show you basically what the wallet looks like on an iPhone and how that transaction cleared. So that's basically it as it relates to a transaction. Again, it's pretty powerful. Why? Because you're not really going through a centralized authority. You're not going through a central bank. You're not going through a financial institution to actually create a transaction, right? It's basically a peer-to-peer transaction based on cryptocurrencies. In this case, on the Ethereum network. If you wanted to do the same thing on Bitcoin, you could. And so let's go back to the point so we can compare and contrast. What is the traditional currency? Again, traditional currencies are centralized. They're backed by assets of a central government most of the times. In the case of the US, they're backed by the whole willingness of the US to not only print money, but also pay back its debts, right? That's the whole notion of a risk-free rate in finance is the credit worthiness of the US government. Traditional currencies are also seen as a storage of value, right? And that can be, because of the scarcity component of it, because of the fact that, inflation exists, because of interest rates and so on. And they typically are obviously backed by something, right? The reserves or the willingness of somebody to pay. Traditional currencies, as it's obvious, also fluctuate in value, as we know. And cryptos also fluctuate in currency, in value. Cryptocurrencies happen to be decentralized, so no one controls the network, as it has, inherent consensus algorithms built in. How do you validate transactions? Well, in the Bitcoin network, you validate transactions by cracking a puzzle, you could say, right? And how do you crack a puzzle when everybody else in the network is competing against cracking that puzzle? Well, you throw computing power and energy to it to crack that problem and get rewarded in BTC for cracking that problem. That's how it all works. Cryptocurrencies also, if you look at the history of Japan as an example, they were one of the earliest to have over 300,000 stores a few years back that were accepting, Bitcoin as a form of payment. It is clear that you could pay with Bitcoin. There's many stories of, $500 pizzas because somebody paid in with Bitcoin and it increased so much in value. But there's limitations, right? The speed of transactions is not the same as a credit card. The throughput on the network is not the same. The fact that you have to spend a lot of energy to clear transactions is also an issue. Cryptos are also typically not backed by anything. These are essentially microeconomies that are built around a cryptocurrency that is backed by revenues, or is backed by a business model, or is backed by just a white paper. All of those cases do exist. Clearly, they fluctuate in value. So when you're thinking of payments and sending $1 on the one end and the other end receiving $1, net of transaction fees, there is obviously the fluctuation in value versus dollar or other fiat currencies. And so clearly, these payments may settle at a different value than that dollar that you intended to pay. So what is Bitcoin? Bitcoin effectively is, and actually I should give credit to some of the sponsors of the webinar, Accenture and other folks that have provided, limitless amounts of data and research for you to actually be able to consume it. So what is Bitcoin at the end of the day is basically the leading cryptocurrency. It is basically the leading one in terms of market capitalization, also the oldest, and is stored on a global decentralized peer-to-peer blockchain. We're going to cover, what are the different types of blockchains in terms of permissions or permissionless. Clearly in this case, it's a permissionless blockchain because everybody can contribute, everybody can participate, everybody can transact on this network. There's not really an approval entity that says, yes, you can now be approved to transact on Bitcoin. All you need is a wallet, either MetaMask or Coinbase. Coinbase just went public too, so they may actually be able to increase their security over other ones. But nonetheless, the idea here is that crypto is not the only one. Rather, Bitcoin is not the only one, but it's definitely the oldest and the largest. It is a digital asset, meaning basically they're designed as a medium of exchange. Blockchain is the underlying technology that enables these transactions to take place. So you can think of, blockchain as the network where you can bring in participants, in a controlled or uncontrolled fashion, who can then transact, anonymously or pseudo-anonymously, in that secure and trusted manner. So blockchain is essentially the technology, but the enabling assets to transfer value are cryptocurrencies. Again, I already mentioned that this is open to anyone, and the value can be transferred without an intermediary, excuse me. Mine independent. So the creation of Bitcoins depends on mining, and that's done again through computers and energy to solve complex equations. And like I like to say, it is basically cracking a computational problem. Currently, this is very energy intensive, and for it to become sustainable, it most definitely needs a solution for the energy consumption component. The history of Bitcoin dates back, to 2008. In the beginning, the government had seized different assets that were utilized in different websites that were nefarious in nature. Silk Road being one of them, where people were using cryptocurrencies to buy drugs or order hits, etc. That has, since been cleaned up. But the issue at the end of the day is that it created a lot of skepticism and criticism for the industry in the beginning. At this point now, it seems like every asset manager out there is trying to get investors to come into crypto, either because they're asking for it or they're losing grounds to other companies, where perhaps like Robinhood or Coinbase, who are actually providing access to the cryptocurrency market. So it's definitely gone mainstream. When you look at the price of Bitcoin having surpassed already $60,000, for each coin, it's clear also that in the past it has, this has crashed, right? If the price that you're going to get for the reward of your mining, right? So if you're investing in computers or you're investing in energy, and you're only going to get, let's say, 6.25 BTC, if the price is high enough and it covers your cost, then you're going to mine. But if the prices are low, then you're not going to mine, and that subsequently creates a spiral effect in terms of the price volatility. Moving right along. Okay, so to recap, Bitcoin is effectively based on proof of work. So you have to show the proof of you solving the computational problem. Clearly, because this is distributed ledger technology, so everybody in the network is a node effectively, and every node has a copy of the ledgers. And so, when you're looking at proof of work, at actually solving one of these computational problems, you're having to spend energy and computing power so you can validate transactions. That's at the end of the day what you're doing. You're validating transactions and you're getting a reward for it. When you're dealing with Ethereum 2.0, I should say, because Ethereum at the moment is still transitioning to proof of stake, you're having to buy a stake into the network, and through that stake, you become a validator of transactions. And so there's pros and cons on each, which will leave up to questions. The same way that I transfer value through the wallet earlier is the same way that you would do that with Bitcoin. When we look at a little bit of the history, 2016, again, Bitcoin got started circa 2008, 2009. The ICO craze, or the initial coin offering craze, is what created a lot of those ERC-backed tokens that I showed you earlier on Coin360. 150 million was raised through the DAO, and this is one of the marquee cases in the whole, cryptocurrency movement, you could say, because it not only was the largest crowdfunding campaign at the time, but it was also an organization that was decentralized, autonomous, and with no employees and no CEO, effectively becomes a crowdfunding VC fund, a venture capital fund that can back blockchain-based startups, through a consensus mechanism. So picture that, 51% of the participants could say, yes, we want to back XYZ company, and they could do so entirely on the blockchain network. That's all fine and dandy. Unfortunately, they also got hacked, and there was basically about 3.6 million that were not lost permanently, but temporarily lost, because what you would find in some of these networks is that you could also create a new fork. think of it as a fork on the road. So you're bringing in everybody who was on a prior network to a new network, and that's effectively how they got rid of this problem, is by creating a new fork on the network. We already covered sort of the map of the market. Again, on the right-hand side are all the Ethereum-based tokens. And so let's go back to the different types of blockchains, because now you understand the basics of how value can be transferred from one person to another. Well, now let's just define quickly, what are the different types of blockchains. So think of it as hybrids, either because of, on the one hand, you can really invite only the people that you want to have access to the network or contribute to the network, and the controls could be centralized. That could be a permission-based network. A good example of permission-based networks will be transactions that are being done by financial institutions, where you need to have a need-to-know basis, right? And you need to share information cross-border, for example. Permissionless blockchains are the ones that are backing, for example, Ethereum and Bitcoin and some of the other cryptocurrencies out there. Anyone can join the network and contribute or transact, and the controls are decentralized. Also worth noting that there are other examples like R3 and Corda, where they have created hybrids, right, between permission and permissionless. What you think also about the movement on central bank digital currencies, or digital currencies that are backed by central banks. These are envisioned to be permission based, so that central banks and the financial institutions and the monetary systems can basically transact with each other. Right? So imagine the overnight lending window from the Fed being enabled through a blockchain. So high level, permissionless blockchains, anyone can join and submit transactions. Anyone can contribute to the computing power on the network and broadcast network data. And all transactions are also publicly available because they're broadcasted as well. When you have private and permission-based blockchains, only the safe listed people basically that are enabled by you can join the network. And only those safe listed participants can contribute to the computing power of the network, and only those can also broadcast network data. So again, it's based on privileges that are controlled by a centralized party. So at a high level, you probably already are familiar with this because we went through a transaction earlier and I've told you some of the same things already. But in the event that you wanted to, let's say, ship a computer from Shenzhen in China to London, and it arrives, well, now if party A is in London and it needs to be sending money to party B in Shenzhen, then they would initiate a transaction, step number 2 here in the diagram. When you're initiating a transaction, then that transaction can be broadcasted to the network and it can be validated in the network. The transaction, once it's validated, is put into a block, and that's why it's called blockchain, because it's a chain of blocks. Once that it's executed, the money then will be moving from party A to party B, and then subsequently get added to the chain. Last step is basically the network approves the block, which is sealed, and it becomes immutable. That's one of the benefits also of the blockchain, is that it has global readability, that it is immutable transactions that could take place. And so if you think about it in the insurance world, because of the immutability of these transactions, if somebody claimed insurance against a lost phone, but let's just say that they had 2 different insurance policies, well, clearly they wouldn't be able to claim insurance twice, because the first transaction of claiming insurance against that same asset would prevent the second transaction from clearing. And so there's clear implications of this very simple but yet extremely powerful technology development in blockchain and cryptocurrencies in general. Little bit of history, but if you just go back to the 90s, the concept of distributed computing came about. 2008, 2009, Satoshi Nakamoto created Bitcoin and introduced the concept of blockchain to create the decentralized ledgers. If you fast forward all the way to 2014, 2015, smart contracts are becoming more mainstream, IBM being one of the key players in implementations of enterprise solutions. FinTech School has actually been a partner of IBM since 2016. So very happy to have worked with them in the past. In terms of industry projections, sorry, Markets and Markets estimates that the annual growth rate between now and 2025 will be about 67.3%. That's significant because it's an industry that is fairly nascent, but is growing at a very rapid pace. When you look at investments and what they call the smart money, either institutional or venture capital, significant investments by most of the top tier VCs have been made into cryptocurrencies, blockchain, or fintech, as you probably are aware. So what's an impact right away for consumers? About 5 years ago, cost of a wire was $50. The cost of a remittance and TransferWise, Remitly, Zoom, some of these other fintech companies that are blockchain enabled is less than $5. When you think of this also going mainstream, make no mistake about thinking that Western Union is not implementing blockchain underneath the hood. What's really happening at the end of the day is as long as you can perform the function that you said you were going to perform, which is sending money from point A to point B, there's still a margin of 5% that they can play with. Well, they can reduce their costs significantly by implementing blockchain and pass that through to the consumer rather in some fashion, or keep it all themselves. And I'm not saying either way. I'm just saying that there are a lot of implementations as such where underneath the hood is blockchain enabled, but the offering to the consumer is still as it used to be. So what's the industry impact? Well, supply chains could be becoming, if you have the entire supply chain network on one blockchain, it could provide transparency, traceability, or ethical traceability for, let's say, diamonds, as you'll see in a case coming up. Luxury goods could also be traced in terms of the point of origin and the authenticity of those items. And so again, there's a lot of efficiency that can be gained by implementing blockchain. Trade finance, same story, whether it's cross-border payments that are rules-based, that are programmatic in nature through smart contracts that are enabled real-time, rather than trade settlement that could be, when I used to work in finance, derivatives used to take close to 10 days to settle. But, derivatives are nothing more than, you could say, term sheets that could be embedded into a smart contract so that, a trade like a swap could be settled on day one. Games, transferring game credits, sharing your device for computing power. So if you can imagine, when you're not utilizing your phone, there is computer power that is misutilized, right? And that could be shared, like storage has done, for example, to replicate what AWS does, or Amazon Web Services, the cloud. Similarly, there's other companies like Engine, which also enable gamers to share the device so they can earn crypto because their device is being used for mining purposes. Banking, enabling settlement of different payments and trade types, either for individuals or institutions. It could be remittances, or this could be institutional trades, like I mentioned earlier, on derivatives. So let's talk about some cases. Boeing implemented a blockchain to source, buy, and trade airplane parts. Pretty interesting because they control the network. It's still decentralized, but at the end of the day, they're the biggest proponent and the one that is actually bringing everybody else into the fold. This is a similar effect to what Walmart has had with all the suppliers and manufacturers that they work with. I mentioned this case already, blood diamonds, whether they're ethically sourced, the point of origin of the diamond, or if you look at whatever Ledger is doing, it's effectively creating a proof of origin and an ethical sourcing of high value goods like diamonds, wine, fine art. Now with NFTs, non-fungible tokens, as you'll see later on, anything could be digitized and resold and traded. I'm not going to say that they're not securities. In my opinion, they're all securities, but we're not here to discuss that. So what you can see here on the left-hand side is that these essentially become a new digital signature. So this is your thumbprint that somebody can validate on a blockchain, right? And as you can see, it has a significant amount of data that could be stored and tagged with this asset. Walmart, it's implementing blockchain not only for its supply chain, but also to track and trace product recalls. So if you can imagine everybody being on the same network, everybody knowing the same information, if there is a recall, there's a lot. It's a lot easier to effectively communicate and to track, those recalls of products. If you extrapolate that and now you apply it to the pharmaceutical industry, well, there's a lot of drugs that are counterfeited and adulterated products, and that's a problem. And so when you look at implementations like the work that KPMG has done, you can effectively tag drugs within seconds, and potentially improve pharmacy and patient safety, right? As a result of everybody being interconnected, and everybody having a copy of the ledger. In this case, a ledger could be the same information as to who owns what, right? That's an asset. The FDA has also worked with KPMG, Merck, and Walmart effectively to create a pilot to support the U.S. Drug Supply Chain and Security Act, the SCSA. And this effectively addresses the requirements to identify, track, and trace prescription medicines and vaccines distributed within the U.S. So again, this is a traceability use case to prevent counterfeit drugs and altered drugs. Global ID. Here, what I can tell you is there was an ICO called Civic. They raised a ton of money as well. The idea here could be that, customs and airports and U.S. immigrations and immigration departments across the globe could effectively join on one network, and you could have a digital copy of your passport, thereby eliminating the need for a passport. But perhaps more importantly, and even to bring this to a purpose, there is a company, or rather a project called ID 2020, which is backed by the UN, the United Nations. And what's the issue or the problem they're trying to solve is that 1/6 of the global population lacks documented proof of existence. And when you think about that, that's pretty powerful, right? It's 1/6 of the global population does not have a documented proof of existence. And so they cannot participate in political movements or political events or even vote in some cases. It also creates social economic issues, and prevents people from actually having a digital footprint in some cases, or even transacting in e-commerce or saving and investing. So this ID issue is it's a clear issue for the entire nation, or rather the entire world. But again, notable NGOs like the United Nations are also behind solving it. Logistics, I will mention DHL, and I would also mention Maersk, two examples of companies that are implementing blockchain to track logistics and shipments and so on. When you think about the supply chain, and again, this comes from one of our sponsors here at Accenture, we see there's a tremendous complexity within each blockchain. And so if we read from the left all the way to the right, again, the example of that computer being shipped from Shenzhen, you have an insurer perhaps of the shipment, which is the exporter's bank. You have the customs at the export point. You have a freight forwarder. You have the export port before it actually goes into a ship, which is the carrier. Once it arrives in London, then you have, that's your import port. You obviously have to clear customs in London, and then you have the bank from the importer, and then the importer, him or herself. So this entire network can become a lot more faster, leaner, and in the entire global trade industry. So what are examples of the things that we discussed before? Authenticity, whether diamonds are being ethically sourced, whether the diamonds are in good condition, or whether that computer is in good condition when it went from Shenzhen to London. Again, improving transparency, traceability in the supply chains, and automating commercial processes with smart contracts. So if something is scanned at point B, that's already a signal that can trigger a smart contract. And that could be utilized in many different ways, not only to transfer value. All right, stock market, many implementations here. You could look at JP Morgan and Onyx as an example of a blockchain implementation. R3 and Corda, that's another example of a recent pilot leveraging blockchain. In the case of art, you have basically OpenSea is an example of a new marketplace to where you can create an NFT or a non-fungible token to digitize an asset. So let's just say that what you're seeing here, this picture, is worth Nothing. But for some reason, if I became an artist and I said, okay, I put my signature on this picture, and I'm going to create a digital asset for it and sell only 100 copies of this digital picture, then because of the scarcity and because it's now tokenized and perhaps it's sexy, people are actually backing a lot of these digital um, assets, right, in the form of NFTs. And so a lot of celebrities have also gotten into it now, whether it's Elon Musk pumping Dogecoin and then saying it's a hustle on SNL, or when you have Tom Brady, um, potentially launching his own NFT. It reminds me of also what happened in the ICO days, where Paris Hilton and famous boxers were also considering tokenizing their future earnings and selling those earnings to their fans. I'm not here to criticize anything. I'm just telling you basically that digital assets or any form of digital print or art can be digitized and sold to the rest of the world. Now, if somebody is buying an NFT or a non-fungible token, they're essentially buying another one of these ERC20 tokens or an Ethereum-based token. They can be in different networks as well. But net, you're getting arguably a piece of something there that has limited supply, and because of the tradability of those elements, they're subject to supply and demand, and that's where the speculation comes in. So when you look at companies like Engine, I mentioned to you that they can enable NFTs for everyone, but one of the use cases that I find interesting is what they do with games. I'm an advisor to a company called Space Misfits, which actually provides users the ability to buy spaceships, planes, blueprints, all through cryptocurrencies, and effectively also trade the same assets that have been digitized. Crypto for writing. There was an example of a company called Steemit, where you could effectively be writing articles and blogs and posting content and getting paid in crypto for it. So this could arguably disrupt journalism in the way that we present information and why we research things. Game credits. So we talked about the ability to transfer value from one gamer to another, and also Engine. And this is effectively a copy of one of the alpha versions of the game that I mentioned to you. Central bank digital currencies. When you look 2-3 years ago, I did a presentation at the UC Hastings Law School and on the same topic. And at that time, there was really no consensus. You couldn't say, hey, central banks are going to issue digital currencies. You had some early adopters like Sweden, but clearly there was no consensus. Again, Russia had prohibited Bitcoin. China had also prohibited Bitcoin. Venezuela was jailing miners, and so miners, if they were found with wallet addresses and hash keys, if you fast forward now, it's clear that in places like Uruguay, they're thinking of digital currencies. Sweden also is on the forefront. China is also toying around with basically having a digital yuan. So many central banks now are starting to think about, issuing their own currencies to power their own financial systems. One reason why you could do this is, the cost of having float. Physical cash is actually really expensive. But I think that there are still a lot of limitations. Not the least of which is probably security. How and who would be enabled to come into the network and transact with central banks? It's a question mark. When you look at the decentralized finance movement, a lot of value locked up into the DeFi movement. And so if you think about, let's just say a loan, you can originate a loan on the Ethereum network, and all the payments and repayments, the interest and principal repayments of that loan can all be done through crypto on Ethereum, and could be enabled also through smart contracts. Again, smart contracts are nothing more than programmatic set of rules embedded into an executable so that you can effect a transaction given a trigger. And that's just a simple example. So what are some of the other examples? Well, you have lending, you have decentralized exchanges like Uniswap. Lending, you have Compound, Maker rather. So there's a lot of, call it new waves of applications that are, mimicking, you could say, the traditional financial services world, but powered all through blockchain and cryptocurrencies. That's basically the gist of it. So if you wanted to get started, I like to keep things practical. If you're joining or a startup or creating a project, I would say just be creative, be as bold as you can. Don't be afraid. Do as much homework as you can, but remember that there has to be a thin balance between the learning and earning. This is particularly important for people that are coming from the traditional financial services world, making six-figure salaries and coming into the fintech or blockchain startup world. Well, it depends on the company, how well funded they may be, in order for you to actually be able to earn the same, which is unrealistic, to be honest. It's more of a seesaw between cash, equity, maybe some upfront if you're working in business development or fundraising. But yeah, typically when you're working on sub 10 startups, there's a little bit of a lot more learning than earning, perhaps, and down the line on the back end. If there is a payoff because of an exit, an IPO or SPAC or a buyout, then you can, be sure to earn if you get in early. So happy to actually connect with people who want to discuss this more. I do a lot of mentorship also for people that are going into grad school or underrepresented minorities or folks that just need, a quick pat on the back or a connection point with someone. So more than happy to help on startups in any way that I can. If you're creating your own, I would say choose your team wisely and always focus on 5 Ps. The 5 Ps at the end of the day are good people. People is the first P. Build good products. Good products tend to be built using processes that are agile in nature. And those processes that are agile in nature tend to also lead to cost effectiveness and capital efficient growth, which leads to profitability. But at the end of the day, if you don't have a purpose, which is last P, you really are not going to get anywhere. Startups are also high burn. They remind me of my investment banking days without the pay at the end of the day. So this is a game of love it or leave it. It isn't for everyone or the faint of heart. In terms of skill development, shameless plug, but look, FinTech School has a lot of entrepreneurs in the crypto space, in the blockchain space, also academics from Berkeley, from the Drucker School of Business, from Wharton, from Cornell University. So both industry and academics who could actually provide you with live stream training courses, much more advanced than what you've seen here today, or the self-paced courses that we have at fintechschool.com. For anybody who attended this, if you send me a quick email, I can give you a 25% discount. So if you're developing your skills, clearly that's one way that you can go about it. But if you're focusing really on 3 E's at the end of the day, it's your experience, your exposure, education. Experience and education, I think, are pretty self-explanatory. Exposure can come from something like learning calligraphy, like Steve Jobs did, right? Or traveling around the world, or just meditating, trying something new. So that's basically it on this end. So if you're going to jump into the crypto world, please do your homework, and as I say, try to get some adult supervision as much as possible. Coming back here, I will show you the transaction. Excuse me. So this is around, I don't know if you can see this, but basically those are the 2 transactions that I had made earlier, and they both showed up on my phone. So clearly now I paid my contractor. So we'd love to open it up for questions. We have about 13 minutes. If anybody has any comments, feel free to chime in and go on mute.
Hi, Amilcar. This is Suresh. Thanks for the session.
Hi, Suresh.
How
are you?
I'm good. How are you?
Doing well.
So the question is regarding NFTs. I'm able to make a relation between a utility token or a ERC20 thing. But then when it comes to ERC721 NFT, how is the value determined? Maybe I can have the same artwork, let's say, for example, listed on a different blockchain. So how is it that we say that no, if it is listed on a blockchain, it's going to be unique? Yes, it's going to be unique to that blockchain, but it can have replicas in the others. So I'm not able to understand the concept or why people say that NFTs are so highly valued because they're unique.
Right. No, I think you're identifying a limitation. Yes, you could cross list on different networks and create ABC token on one side
Yeah.
and CBD token on the other side. So that's clearly one limitation. But at the end of the day, when you go back to assets and speculation, how trades happen, if there's a supply and demand for any given asset, whether it's salt, gold,
Okay.
then there will be a market, and that's basically what's going on here. Is I think also there was a catalyst for change in the fact that COVID brought forth, the inability to go and showcase your artwork, right?
Okay.
So how would you actually be able to sell your artwork? Where digitally was one way that came about. Another implication that came out of COVID is the SPAC craze, where people couldn't go on a roadshow as an investment banker to pitch companies and ideas to anybody else. So SPACs have been around for a lot of years. They used to be called blank check companies. But yeah, so I think there is catalysts that have actually enabled the craze, and there's also the speculation aspect of the craze. But I wouldn't dare to say, hey, this is only going to be unique. Perhaps if it's clear that is unique only and available only on one specific network, and you can prove that, then yes, you would solve that. But I don't think we're there yet.
Okay. I got it. That's thank you.
Amilcar, I have a question. Julio.
Sure, go ahead. Hey, Julio.
How are you, sir? Excellent presentation, by the way. I learned a lot. All right. So when it comes to insurance, I'm sure I can buy an insurance policy with Bitcoin. However, if it comes time to settle or pay the claim, how will that work? Will it also be paying Bitcoin and the homeowner can handle it? Because I found a problem. The problem in the state of Florida is that insurance companies don't want to insure roofs for hurricane protection. So I'm trying to be the solution to that problem, integrating Bitcoin and blockchain. I'm far from it, trust me, but again, I wanted to come and learn and get your comments on the situation.
Sure. Well, first of all, let's just begin with the premise of why buy the insurance policy with Bitcoin when you can just buy it with cash in exchange for cash, right? And so when you're insuring something, you're effectively buying the replacement value of that asset if an event occurs, right? In this case, it could be a catastrophic event. So when you're pinning that value, I wouldn't say, for example, stocks have been around forever. Stocks are also speculative in nature. So would I buy, if I bought an insurance policy with stock, would I expect to get the stock back? I think the underlying thesis of that wouldn't make sense to me because, the stocks will go up and down in value, and I'm not really sure if they're going to go up and down in value. So why would I leave myself unhedged in terms of that risk, right? If I wanted the replacement value of my home, then I would just ask for that at the end of the policy, right? So I don't know that I see do you have an example of a company that is already enabling?
No, not at all. Not at all. But, again, I found a problem in the state. Well, it's a lot of, I'm an insurance agent. I've been an insurance agent for 21 years. So I actually move in that space a lot. And we currently have that issue that insurance carriers are not insuring homes at this moment. It's like 5 out of 200 are only insuring homes right now in the state of Florida. So again, me trying to be the entrepreneur and found a need, fulfill that need, and at the end of the day, profit from it, right? But again, it's a tough thing. So I figure maybe find an alternative on how to go about it and solving it. That was it.
Yeah.
Thank you.
Yeah, no worries. I might look at reinsurance actually as the angle. So trying to issue the policy, but then resell the policy and leave yourself flat in terms of risk.
Thank you.
Yeah. Anybody else have any questions, comments? Eric, you're unmuted, so I don't know if you're ready to go from El Salvador. How are you?
Hello, how are you, America? How you been? I am entering a little bit late, I think. Sorry about that, but I wanted to see or to hear where you've been with this subject. So interesting.
No worries. Yeah, we will be sharing the recording and the presentation so you can watch it. And obviously you have me on speed dial so we can talk anytime.
Yeah, thank you, my friend.
All right. Anybody else? Okay. Well, I have concluded the presentation. I don't have anything else to share. If anybody wants to connect, I am available on LinkedIn. Very active also on LinkedIn, and again, we operate basically an online fintech school, so you can ping me if you're interested in taking some of the other courses. I do teach also at Wharton and Cornell, and I have been creating new content like the one that you saw today to help other people basically accelerate their knowledge of fintech, but in blockchain, but to make it practical in nature so that it becomes actionable. I'll stay on if anybody wants to stay on. Otherwise, feel free to enjoy the rest of your day.
Yes. Can you hear me, Amilcar? This is Francisco.
Hi, Francisco. How are you?
Good. How are you? I just want to say thank you for the presentation. I work at PG&E, and I saw you give a presentation with some of the other Wharton students a few years ago out in San Francisco.
Yeah.
For programs that my company is a sponsor. And I remember meeting you, and you were super nice. And I was very excited that you were Hondureño, I think, or Nicaraguan. I can't remember.
Both.
But my like me, like really being in this type of space.